Yo, welcome everybody. How y'all doing this Sunday? This is your boy, The Fat Stacks. And it's been a while since I've done a video on the financial corner, but trust me, I've been doing a lot of live shows on Twitch. So if you want to catch me on a live show on Twitch, there is a link for that in my YouTube. So how is everybody doing this Sunday? We are going to focus on today on what's been going on in the market for the past weeks, aka interest rates, bond, the yields, and what's been going on. Now I'm going to keep things in simple terms. Of course, the Fed had said their piece that they're not going to raise interest rates. They're going to let inflation run a little hot. So, which means that as of right now, as you see, all the heavy growth stocks are taking a hit because of the bond markets. People are having, scares of inflation. There are inflation in certain areas. The CPI doesn't look too high. So, and what the inflation is now is only a little bit off of what it was all of 2019. I believe the inflation now is like 1.7, and last year the inflation was like at 1.9, and growth was still good before y'all know what happened in 2020. So, but today we're going to look at, like I said, certain stocks that I've been looking at to buy as well. So I will say this. When it comes to the rotation right now, it seems like there's been a lot of selling off in a lot of the tech in the tech spot, and mid caps and small caps have been getting some love on the value plays right now. I will say though, if you are looking to get into some of these big names, now is the time to kind of buy into the dips and what's going on. Dollar cost average yourself in. Take a little bit here, a little bit there, because that's what I'm doing myself. I'm looking into certain stocks that I want to get into or have been looking at, and I've been buying in on the dips here and there, a little bit by little bit. So I will say though, even though tech is dropping right now, I mean over time it's going to go back up. And plus with some of these companies have been overvalued as well. So I would definitely be careful watching some of these companies that their prices have been overinflated. So once again, now is a good time to get into them. Now, me personally, I've been looking at stocks, mid cap and small caps that I've been buying into. So as you can see on Friday, as you can see on the chart here of how the Dow was down, the S&P was down, and the NASDAQ was down. So I will say this with, oh, sorry, the NASDAQ was up, not down. Sorry, as, as I scroll down my chart. But I will say this, though. Now is definitely the opportunity into getting in. To me, I'm not worried about inflation or interest rates. Right now, I'm just looking at quality companies that I want to get into that are going to pay me good dividends for the long haul. So I'm just taking my time going through, combing through balance sheets, cash flows, because regardless of what happens, interest rates or yields, a good company is still going to perform. So as you can see, like right now, Apple is very low, in my opinion. I've been looking at Apple. Apple's a good company. IBM is another one I've been looking at. So the companies that I have gotten into, I'm going to show you guys right now. As you can see, I am on my account here, and I want to show you guys BGS. This is a company that I had before, actually. I bought into it at, I think, $26 a share, and I sold out of it at $28 a share, I believe. I had like a small position, but now I'm getting back into this position, and I'm going to hold for the long haul. So this is a solid company, a solid dividend. Like I said, I got into it before, sold out a little bit. Now I want to get it back into it for the long haul. Like I said, it's one of the companies that I've been personally looking at, to keep. So the next one is VOD. If you guys don't know, VOD is a communications company, telecommunications, like AT&T and Verizon, but it's more in Europe, Asia, Africa, a large carrier in those countries over there. So I should say in those continents over there, not countries, continents. So when it comes to Vodafone, what attracted me to it per se is because of the 5G play. I know a lot of analysis are now looking at companies that can transform the world, and they're trying to um, look into stocks that can be more like Tesla, because everybody knows Tesla is a tech company that makes cars, and with the chip shortage and everything going on right now, you're going to want to be looking for companies that can transform the world per se. But me personally, I like to stick with, you know, as of right now, because I'm a small in, what I mean, I'm an investor, but on a smaller scale. So I'm trying to put my money in companies that I can build up that cash flow, build up, those dividends, so then I can, take a risk into going into some of these companies that don't really have a positive cash flow yet. So, um, but this company here, like I said, I want to get into for a 5G play. Now, another caveat of this, they also are they're breaking off their tower section, which they're looking to make money. Just like if you have like American Towers when it comes to telecommunications, Vodafone is also going to break off their tower segment called Vantage Towers, and I'm looking for that IPO to drop. From what I heard, sometime at the end of this month. So I don't know exactly when, but I'm definitely looking forward to their their tower segment dropping. And as you can look for we'll look at the news, the tower party right here, just to show you guys what I'm talking about. Right here. I'm going to read it for you guys. Once listed, Vantage wants to buy more towers from operators like Vodafone could use the cash. It is following the lead of Cellnex Telecom, Europe's largest independent tower company. Since November, Cellnex has agreed to buy roughly 18 billion worth of towers from businesses controlled by Hong Kong billionaire Li Ka-shing and Franco-Israeli tycoon Patrick Drahi. So carriers have had a strong financial motive to sell, whereas stock pickers until recent months have shunned network operators they piled into Cellnex, leading to a huge valuation divide. Investors like infrastructure providers, low risk revenue profile, contracts with Europe operators are typically indexed to inflation. Let me raise this up for y'all. As well as potential gains from the tower sharing. Vodafone's move to spin off a minority of its Vantage is a way to unlock value trapped in its business without giving up strategic control. So, and as you can see if you read further, AT&T and Verizon long ago started selling towers to specialist real estate investments trusts such as American Tower and Crown Castle. 5G will bring growth to the U.S. sector too, possibly sooner given the slower pace of investment in Europe, but it has less scope for gains through deals. American Tower wants to join the party in Europe. In January, it agreed to pay $9.4 billion for a tower business controlled by the Spanish giant Telefonica. So as you can see, there is money to be made in the 5G in these towers, solid dividends, solid cash flow coming in. So it's definitely a play I wanted to get into early, because when you look at the price for Vodafone right now at 18, it's very attractive. The annual dividend is attractive. So I'm already in AT&T. I'm already in Verizon. So getting into this was just a no-brainer for the, like I said, European, Asian, and African continents over there, which Vodafone has a large presence in. So my next IPO that I will be looking at it's not out yet, but it's Coinbase. I know a lot of people are in cryptocurrency right now, and Bitcoin is just going up, and Coinbase, since it's going to be a direct listing, it's going to be interesting to see what the price of that direct listing is going to be. Now, obviously, Palantir came out with their direct listing, and I actually got into Palantir. I've always said this before. I got into Palantir when it was like $9 a share. It was like between $8 and $9 a share, and I held it for a while. And I had about 100 shares, and I sold out at $25 a share. So, and as of right now, I'm looking to get back into Palantir right now. If it drops, because right now it's going between, 23, $25 somewhere in there a share. If I can catch it around $21 a share, I'll definitely jump back in. Because I believe Palantir, definitely give Palantir about 5 to 10 years. That's all I got to say. Give Palantir about 5 to 10 years. If you have a little risk to put on a company, I think Palantir is a good company to put a risk on, for what the stock price is. Everybody has their analysis about Palantir and what they do, but from what I have seen with their programs and what they're trying to do commercially, we all know they worked a lot with the Department of Defense. So, but those are my views right now about the companies that I'm looking at, what I'm looking for, and what's going on in the market. Like I said, if you're looking to get into a tech play, now is a good time to look. Value and small caps, you have people shifting, selling out of the growth and getting into small caps and mid caps right now. You see financials was doing well in the last 3 months. Oil has been doing well in the last 3 months. I mean, I bought energy when energy was low. So I'm definitely glad to see the growth in energy. And I wish I would have stuck, because I did get into JP Morgan when it was $99 a share. I did get into Citigroup when it was, $44 a share. And I did get out of both of them once they got up. I made a little profit, and then I bought some other things. So, but as well, I just wanted to show you guys as well my income estimator right now. What's it looking like for what I have bought? So as of right now, it's looking real good for my annual payout. Like I said, the goal is definitely to get to that monthly estimate where it's about 2 to 4K a month. So I've been steadily trying to find good companies to invest in. Now, mind you, I'm paying very close attention to these investments, and as the dips are happening, I'm buying little by little. So I'm not putting everything in right now. So before the market starts running away, because with the stimulus checks and everything coming in, you're going to have a lot of people spending money as soon as the vaccines start going worldwide. So you already have a lot of people getting vaccinated and everything. So I expect, my opinion, 2022 is going to be one heck of a year in 2022. You'll have a lot of traveling and everything going on, and people spending money with the stimulus checks and everything come out. But in my personal opinion, I want to try to get into whatever stocks I want to buy now before a lot of things take off. So make sure y'all do y'all due diligence, do your research. Those are the stocks that I'm looking at, the stocks that I have bought into. Like I said before, I'm looking into get into Vantage Towers, Coinbase whenever it does drop. That's just things that I'm looking for. And I'm going to continue investing in the companies that I already have. So appreciate everybody coming through. Make sure you hit that like button. Make sure you hit that subscribe. You guys have a good Sunday. Y'all stay blessed.